I am the best trader on the internet. If we were given a $10,000, $100,000 account, you put every guru in a room. I'm talking about crypto traders, stock traders, option traders, everyone. I would blow everyone out of the water. I'm a very, very good trader. But that doesn't really help you, right? So what I've done is I've made a very, very easily digestible way for everyone to learn how to trade. Knowledge is everywhere. Knowledge at this point, knowledge is everywhere. It's not hard to like pick up a book and find a place to learn how to trade. But now the game is teaching people how to learn and what specifically to learn based on each person's place in their journey, right? And I think that I do that better than everyone. Personally, the profits that I have helped teach everyone make, right? You guys could go into the profit and losses channel in any of the Discord groups that I've created. The proof is in the pudding. Whether you like it or not, you guys could go to those profit and losses channel. You guys could go to the testimonials channels in the Discords. You guys could go to the one linked below in the comments. You could go into the old Hamid Trades Discord server as well. See the proof. The proof is in the pudding. And the reason why I'm so good at it is because I've spent years doing it. So thankfully, you don't have to spend years doing this to become profitable. I've made a very, very simple, easy way for everyone to learn, for everyone to become profitable, for everyone to buy all of the Christmas presents, all of the presents, and send your family on vacation and pay off all the bills and pay off all the debt, not have to worry about stress, not have to wake up with anxiety in your stomach, worried about bills or money or anything like that. Go to stores, buy your family everything that they want. Go and take your wife out to dinner at the best restaurants. Take your kids out and just spoil them. I've made it very, very simple and easy for people how to do that. If you literally follow the trades that I take, step by step, if you follow the steps in terms of proper trade management, it's actually very, very difficult to lose money. It's not a matter of making money. Making money is really, really easy. It's actually difficult for you to lose money if you do it the way that I'm teaching. So with that being said, the link is in my bio or in the comment section below. The proof is in the pudding. Whether you like it or not, the proof is absolutely in the pudding. I have a ridiculous success rate. My students are doing amazing as well. And I would love to prove it to you guys. You guys could go ahead and check the link. Take a step for your future at this point. All right. So I hope to see you guys there. Happy holidays. Let's get started with the rest of this video. First off, I want to start with crypto. So Bitcoin, I personally think that crypto is going to make all-time highs sometime within 2024, early 2025. It is ridiculous how many buyers we see stepping into Mara, Riot, Coin, all of the preemptive things that we see with the BlackRock ETF, right? We got into these Mara calls and they're up almost 100%. Already really, really overextended with IV on the contracts very, very high. So we got them down here and this is almost up 100% already. So from March contracts. So I see there's a lot of potential in the crypto market for the next year and a half. So I would really, really take that seriously. I would really, really recommend trying to make as much money in the short term as possible to put some money into crypto. I've been saying this time and time again. Just dollar cost average into Bitcoin, Ethereum, Solana, different whatever coins, but definitely Bitcoin and Ethereum. And just try to be frugal. Make money day trading, scalping, swinging, right? Extra money that you want to park somewhere, I would park it in crypto, 100%. But yeah, so there's that. And the main reason why I want to start with crypto is because the Russell 2000 is a leader. So now the Russell 2000, when the Russell does well, crypto does well. And because like it has a lot to do with, so the Russell 2000 is an economically sensitive sector. When the economy is starting to do better, the Russell does better. Okay, because the Russell has consumer cyclical stocks. It has stocks in the basket that have to do with if regular people have more money, then people are going to spend more money at department stores and Target and Home Depot. They're going to, try to make renovations to their house. But when the economy is bad, people aren't going to make renovations to their house. People have bills to pay. They're not going to worry about, fixing up their, that broken piece of, bricks on their front yard or whatever, right? They're not going to worry about that too much. But because the Fed is basically talking about cutting rates in 2024, the IWM started to lead. And with the IWM leading, the crypto market is also doing really, really well. So within the IWM also are crypto mining stocks. So, also obviously the gold and silver mining stocks as well. So I would really, really recommend, it's basically just in the future, when the Russell is doing really, really well, crypto is also going to be doing well. So this is a testament to that. But now, also, we could see various different, really, really just disgusting names that generally would not really be doing too well. For example, Run. Like, stocks like this only do well. Run has been, for example, like, it's been getting beaten, right, for quite some time. As soon as the Russell starts doing well, it starts gapping up and it starts skyrocketing up. It's because these garbage stocks in this sector, in the IWM, are starting to get buyers, and that's purely what it is. And so just keep your eye on other beaten down garbage stocks that also have potential to run up. Bingo is actually one that could do well, but there's a lot of but basically what you want to look for is, I'm not saying to invest in Bingo because there's a lot of messed up stuff, but what I want to show is like the setup, right? So you could see that this hasn't bounced and popped up yet. Stocks like this have room to go, right? So Run, it was beaten down below $12, $13 and then popped up. Now it's at 20. So look for setups of stocks that have good balance sheets, good cash, that have potential to run up, that aren't having news of a potential reverse split, anything negative going on in their company, that also have a lot of high short interest. So look for stocks like that, and they should also do well alongside the Russell doing well, because the Russell also does the Russell does well heading into January. So keep that in mind. January is also a really, really good time for penny stocks. I'm not going to talk about them. I don't want to be a penny stock pumper, but that, because the Russell does well generally December, January, small mid-cap companies do well as well. So keep that in mind, and just look out for those setups. There's money to be made basically in these in this sector and in these companies at the moment. All right, so this is a chart, a weekly chart of the SPX. We have gone green for 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. Usually 4 weeks, 5 weeks is pushing it. We've gone up for 8 weeks in a row. The last time in history this has happened. This happened pre-COVID, back in May of so basically happened in December of 2018. We had 1, 2, 3, 4, 5, 6, 7, 8, 9 green weeks in a row. So that led to a small pullback, a shallow pullback, and then we continued making obviously new all-time highs into January. But what I'm trying to show is that this sort of buying pressure is completely unprecedented, and if we do get a bit of a pullback, it won't really be what it is, right? So what this is when we are this overextended, 8 green weeks in a row. Now's not the time to look for longer term calls. Whether you want to hear this from me or not, 8 green weeks in a row, guys, just use your mind. Let's not get emotional. Just take a deep breath. I know that, oh my God, Hamid's been... I get it. It's okay. 8 green weeks in a row, guys. Please do not get into long-term calls. Please. Okay? If you want to get into long-term calls, wait for a red week. Okay? Wait for a red week. Don't get excited. Don't, be upset. I'm going against your theory. Control your mind. Okay? Take a deep breath. No reason to punch any walls. 8 green weeks in a row, you've just seen that it's not really sustainable. There hasn't been many times in history where we have even more than 4 or 5 green weeks in a row without a substantial pullback. Okay? If you want to go long, wait for a pullback. That's all I'm going to say. So this is crazy strength, and it's really, really amazing to see, because there's going to be pretty decent opportunities in terms of buys if you are bullish. Also, the flip side is if you do want to lean short, basically you have to get it with some time. You have to get short with some time and not expect a huge cascading drop. If you want to, whatever, you could position yourself for that. But definitely not the time to go long. And when it is not the time to go long, generally it becomes a start to a good point to go short. So definitely, if you want to go short, get it for basically a month or so out, right? A month or 2 out. Get like a nice red week, and then from there, if it's a strong enough red week, we could see follow through to the downside afterward. But definitely 100%, I'm gonna say this one more time, guys. Do not go long aggressively right now. Wait for a red week. Okay, good. So we also have a rising wedge on the SPX. This is a weekly chart as well. So the higher we go, so this is what you generally have to think about. The higher we go here now, without getting a pullback, the more bearish the move to the downside is going to be, in my opinion. Unless we completely get a really, really strong green candle, that's when this is nullified. When we get a really, really strong green candle, then oftentimes we don't get that strong of a pullback. But if it tries to stretch itself out, right, go a bit higher, but we first do not get a pullback. So for example, right, so now if next week we climb a bit higher to 478, 480 on the SPY, right, without getting a pullback, then we are going, generally what happens is we get a strong pullback. So keep that in mind. This is a rising wedge. Rising wedges are not bullish. Okay, 8 straight green weeks, rising wedge. But we have to also remember, Santa Claus are out. Santa Claus is working around the clock. I don't know how he does it. I'm not sure what the hell is going on. He must be on some sort of I'm not sure what sort of. We need to make sure that. I'm not even gonna say anything. But there's something going on. I'm not sure how he maintains this level of work ethic to be able to do all this. Maybe there's clones. Maybe there's something going on. But yeah, so just keep that in mind. Santa Claus rally is a thing. We could continue to rise, and given that, right, the higher we rise without first getting a substantial pullback or a red week, that is a better case for bears. The one thing that nullifies it is a ridiculously strong green week. All right, so keep that in mind. I hope that makes sense. And that, we could now go ahead and we could just take a look at the yields, the dollar and the VIX, and then we'll take a look at the NASDAQ and the IWM as well. All right, so the VIX has an inverse relationship to the market. When the VIX is rising, generally that is bearish for the market. We saw that the VIX was very far overextended to the upside in terms of the Bollinger Band. When that happens, we should get a pullback. And we got a pullback. So now we need to see if the VIX can hold 13 and hold 1250 as support. You can see that it closed above 13, but it needs to hold above 13 and 1250. And if it could do that, that is going to hint volatility in the market and underlying bearishness in the market as well. Okay, that's simply what it is for the VIX. For the yields also have an inverse relationship to the market. If the yields are rising, then that is generally bearish for the market. You can see that the yields are starting to bottom out a bit. We have this trend line that was a falling wedge, and now we are at that same level of support. It's acting as resistance. We need to break above that and show some strength. We need to see that this bottomed out. So we need to show some strength, maybe get another pullback and a continued move. But right now, it's starting to do what it needs to do for a bit of a inverse head and shoulders. And we need to see if this is going to maintain itself. If the yields rise again, that is going to be bearish for the market. Potential inverse head and shoulders on the 10-year yield. And then last but not least, take a look at the dollar. Dollar, very similar concept. Inverse relationship to the market. If the dollar is rising, that is bearish for the market. The dollar, we got a nice wick below support, but this is still a bit bearish. So we need to see if it's bearish because the lower level of the Bollinger Band is just free fall. So we can continue to fall and just staircase down alongside this Bollinger Band, which is the worst case for bears. But at the moment, this nice wick below is a subtle sign of buyers in the dollar. But, it doesn't look as great. So the VIX can still pull back a bit. The dollar can also pull back a bit. But the yields look the most bearish for the overall market. The dollar and the VIX don't look as bearish for the market at the moment. But yeah, there's my thoughts on those three. All right, so this is the SPY, right? And I was saying how on a 1 minute time frame for scalps, this setup is not bullish. Okay, we had a big red candle. The best case scenario would try to get a short as close to the highs as possible for a continued move down. What happens on a 1 minute time frame on this setup is if we end up breaking the highs, then this is a really, really good short. And if we end up making new highs again, then this is like going short, basically going short on every leg after a really, really bearish setup is a really, really good trade, in my opinion. You don't just change trajectory, because on the onset, right? For example, you could flip this, for bulls as well. When you see a really, really good long opportunity, okay, and you go long and it doesn't work, I'm talking about high quality long opportunities. For example, like if you see a really, really big flush down in the market and the market should be bouncing, but it doesn't, and it flushes down again. At that point where it flushes down again, you don't go short. You stay on course and you try to go long again. And you can see that that's what I do in my trades as well. That's oftentimes when I average in. That's oftentimes the biggest winners, because the first point of a pullback, right? If they don't bounce it, they drop it lower. They're trying to get people that were long here to become bearish. And now when extra people are bearish, then they rip it. So this is the same concept, obviously on a daily time frame, but like especially with Santa Claus and all this other stuff. But if this setup was occurring on a 1 minute time frame, 100% this is what I would do. If we ended up making another high, I would most likely be already averaged in. I would have a position here. If we go higher, I would average in, and then if we go higher again, I would average in again, to be honest. But obviously averaging in is not safe. I don't really like sharing averaging in plays with you guys, but personally, that's what I would do, because this is a really, really bearish setup. If you look at it, everything that I just said, basically, I hope that makes sense. If we fall lower, oftentimes, even if you pick up and open up your charts, right? We get a big flush down. The initial pop didn't work. We ended up flushing down again. People become bearish, thinking, oh my God, it's going to make another flush. It's going to make another flush. This isn't a toilet. This isn't a toilet. It will rise. It will rip to the upside. People are just trying to, market makers are just trying to manipulate us into not being on the correct side. Okay? So if this ends up ripping on a very bearish setup, this is a good short. And if it rips again, this is also a good short. If it doesn't work out, it is astronomically very, very unlikely that it won't. But at each point, regardless of how high quality a trade is, your goal is to stay in the game. The only way you could stay in the game is by managing your risk properly and not allowing your portfolio to blow up and not over allocating yourself to any trade. Okay, so I hope that makes sense. That is my thought process. You can see the same concept is going on the NASDAQ. We are still remaining below. But what's interesting is the IWM is the big winner, right? So, but we didn't get a close above the prior wick, right? But we wicked above. So we're still showing some strength. So with that being said, if the IWM can continue rising and showing strength, this will pull the SPY up. And then the SPY will end up making new highs and break above this as well. So all eyes are going to be on the leader. If the IWM can continue to just push above 202.50, 203, then there's a lot of room. There's not a lot of room. Okay? It's not a lot of room. I would say a level that a lot of people are looking at is going to be around 478, 480. And the market isn't always that perfect. So we're most likely going to see maybe even 476, 477 before we get a pullback. And I'm going to be monitoring it obviously this week. So we're going to have to see how that plays out. But once again, on a small time frame, not a bullish setup at all. So, yeah, you know, to take inventory, the SPX is up 8 weeks in a row. Santa Claus is might be on drugs. And yeah, the reindeer, yeah, bro, I don't know, man. I don't know, bro. They are just overworked. They're being overworked. So God bless. I hope everything works out for, you know, the reindeer. And but yeah, I hope you guys have a happy holidays. Hope you guys have a good Monday. But yeah, you have to also assume that this week the market is not going to be as fluid. It's not going to have as much volume either, and it's not really going to be a week to over allocate and try to make big money. All right, all throughout this week into after New Year's, things are going to be low volume. People are on vacation. Market makers are on vacation. Hedge fund managers, bankers, all these people are taking time off. So once again, just be very, very careful. And yeah, so hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.